G'day ladies, g'day gents. Welcome to this weekend's raid recap video. Well, sort of. Not really going over any trades this week. I thought what I'll do is instead just do a little bit of education. So before I get away, guys, you could, as per usual, hit that like button. Also, guys, I've had a look at the analytics and it's still quite surprised that almost up to 40% of the people viewing these videos, or even more on the trade recap videos. I think it was up to 70%, which I found was really fascinating. I'm still not subscribed, so if you could please do so. You get free education daily when I do the live streams. I go on, I trade live, I answer questions from the chat and analyze different pairs, whether it be currency pairs, commodities, indices, and even crypto. So if you could subscribe and join on the regular for the live streams. So what I thought I'd go over this week, guys, let's cut the music for the time being and get down to work. So what I thought I'd go over this week, guys, was a little bit to do from the trade on Friday, the goal loss. And this is what we do in this channel. We keep things real. We don't just cover wins, we'll cover losses too, because we can learn a lot from those losses as well. We can discover weaknesses. We can discover where we may be going wrong in terms of our entries. We jump in a little bit too early, we jump in a little bit too late. But what I want to touch base on this week was the loss on Friday, why I believe it was not a good trade in the end. And that is due to the fact that we were trying to trade against the prevailing trend. Not the overall trend. The trend on gold is still technically bullish. Well, the way I do my analysis, it was pretty much a neutral bias. However, what I mean by that is we are to look at the higher time frame, that being a weekly candle. By the time we came to the charts Friday, gold was forming a very strong bearish candle. Not only that, the previous daily candle was also a strong bearish candle, this one here. So what I did on Friday was I tried to take account of M30 trend against the strength of that previous daily and against the strength of the weekly. So what I wanted to touch base and go over is show you guys what I mean by how it's less probable and why I feel, especially towards the end of the week, more so on the Friday, it's best just to trade in line with the weekly candle direction. Now, so starting here on gold, if we're starting up near these highs, what we can see is when we start to flip the structure, to flip some structure anyway, most of the pullbacks, so this is pretty much all just one area consolidation. But once we start to trend again, obviously make another lower low, any pullback is generally just a small trickle followed by another impulse. Small trickle back up in the opposite direction, small pullback, impulse. Consolidation, small trickle back up, impulse. Again, once again, trickle back up, but there is no momentum behind the pullbacks. This is what I'm trying to get at, guys. Impulse. Once again, come London session on Friday, actually the same thing. We're just slowly trickling back up, and eventually we end up coming back down. Yes, it was the last day of the weekly candle. Wasn't really any impulse after the pullback. But what I'm trying to get at is when a trend is so strong in one direction, especially throughout the week, if the week's been trending very strong to one direction, in this case to downside, come Friday in particular, the likelihood of price bouncing back, creating a nice clean impulse in the opposite direction to the prevailing weekly candle is less than probable in my opinion. So therefore, it would be best in my opinion at that point, come on Friday, just to patiently wait and look, instead of looking to counter trend buy it, wait for the pullback. Once again, determine what levels you want to get involved in on the chart in a trade. So obviously on Friday I had marked predetermined these were levels that I looked to get involved. And had I waited, perhaps I could have got involved in a sell. Might not have been the cleanest, easiest opportunity, but nonetheless price did eventually reject to only come back down in line with the weekly candle. So instead of trying to counter trend trade it on, especially the last day of the week, best just to wait for the market to set up in the direction of the weekly candle itself and look for your potential option to take it once again in line with that weekly candle in anticipation that the weekly is going to likely at that point close a strong bearish candle as long as we respect levels of resistance on a pullback. And if the pullback is a slow trickle up, it's likely going to be followed by a stronger impulse in the direction of the trend. So pretty much based off that trade on Friday. So the trade was, let me pull it up. Trade on Friday was here. It was gold. Stop loss was below the previous 30, so I was around there. Now, once again, so I looked to get involved in a limit buy. Limit buy was basically at the height that bearish candle's price tapped back in. So we got the closure above, and instead buyer's price tapped back into that previous resistance against the prevailing direction of the weekly candle. Weekly was a strong bearish candle. So I took an anticipation I'm going to pull back further, which, yes, there is a probability it could do it. There is a chance it could do it, but it's less than probable in my opinion if you are trading against the strength of that weekly candle, the bearish candle. So obviously price pulled back, it's triggered me in, where it triggered me in on this M30 at London Open, no, this M30, sorry, at London Open, and ended up coming back down to break previous candle's low. I'd already managed to trade. My stop loss is lower down. Stop loss is at that point. I've already dragged my stop loss up and I managed to trade. Cut it by more than half in the end, so it's just a small loss. Nonetheless, it was a trade that I probably should not have been involved in. So instead, what trade should I have been looking at? Well, should have been looking for my catalyst in price action at levels. So levels I had prior to the stream, I actually didn't have a level there. It was only during the stream that I realized during the stream we had created that resistance, started to pop above it, and that's when I drew it in. But aside from that, I should have just waited patiently for price tapping back into that level. Look to gather any confluence. Maybe it would have been that very impulsive new entry that I take if counter pop straight up and then to reject that zone, perhaps. But otherwise, if it didn't give me my catalyst or my confirmation, I just sit tight and wait, and it would have spared me a loss on that last day of the week. So it still don't end up being a positive week. Two wins, 1 loss, and 1 break even. So yeah, so that's basically the gist of this education video, guys. So basically, in a nutshell, trend is your friend until the end. So come on a Friday, if the market is trending strong bearish, so throughout the week we've got a strong bearish candle printing, best just to wait for either A, a pullback to a previous level of resistance to sell it, or B, for price to begin to pop below the low yet again at a time of volume, preferably around London Open or around NY Open, in anticipation at that point there, lower highs, lower lows, it may make one more impulse before the weekly close. So that's about it, guys. Hope you enjoyed this video. If you could, leave a comment, leave a thumbs up, and yeah, I shall see you again on Tuesday. No stream tomorrow, obviously the bank holiday over in the UK and the US, so I'll be off stream tomorrow, but nonetheless, we might do something for those of you in the Discord. We might do a sim session. I'll see how we go. So if you're not in the Discord, down below, guys, it's for free. Get involved. Why not? Cheers, guys. Till Tuesday. Stay safe. Have a great weekend. Bye, my friends.